political and economic environment is favorable, the company benefits from government infrastructure spending, especially in utility and constructions. Its performance also linked to economic growth and interest rate because YTL operate in capital-intensive industry. For social perspective, urbanization increased demand for utilities such as water and electricity. Technologically, YTL invests in renewable energy and digital systems to improve efficiency and sustainability. However, YTL operates a highly regulated industry. The transitions to low-carbon energy support long-term sustainability. For IOI, political factors are mainly related to agriculture and export policy. Economically, IOI is highly exposed to crude palm oil price fluctuations, which affects its revenue and profit. From a social perspective, there is a rising global demand for sustainable oil, which increase pressure on the company. Technologically, IOI uses foundation technology to improve efficiency. From a legal and environmental perspective, IOI faces strict environmental and land use regulations. Therefore, compliance is critical to maintain market access. This slide shows financial positions of both companies. The total asset of YTL increased from 2022 to 2024, showing business expenses. Total liability also increased due to its capital-intensive project. For IOI, total assets slightly increased, but liability will reduce significantly. This slide shows profitability performance of both companies. The revenue and operating profit of YTL increased strongly over the 3 years. In contrast, IOI experienced a decline in revenue and profit. It's mainly due to commodity price volatility in palm oil market. For cash flow, YTL generates a strong operating cash flow. The company invests heavily in new projects and also repay debt. IOI operating cash flow more stable but showing lower growth. Next, I will pass to Jim. Now I will talk about financial analysis of 2022 to 2024. First, CPT trend analysis. YTL current ratio increased from 1.55 to 1.68, which means YTL became slightly better than paying its short-term debts. In comparison, IOI current ratio increased from 1.78 to 3.15, which showing very strong liquidity and low short-term financial risk. Second, profitability trend analysis. YTL performance improved a lot. Its gross profit margin increased from 14.94% to 39.96%, and net profit margin rose from 4.87% to 12.74%. This shows better cost control and higher profit. For IOI, profitability fluctuated. Gross profit margin moved from 34.69% to 31.1%, while net profit margins stayed around 11%. This is mainly due to changes in palm oil prices. For efficiency trend analysis, YTL asset turnover stays stable at around 0.34 to 0.36, which is expected for a capital-intensive company. IOI asset turnover declined from 0.81 to 0.54, showing weaker efficiency in using asset and generating sales. Lastly, during trend analysis, YTL reduced its debt to equity from 3.13 to 2.68, showing gradual improvement in its capital structure. IOI reduced its ratio sharply from 6.99 to 0.5, indicating much lower reliance on debt. Now let's look at the common size statement. First, common size statement of financial position. YTL has more than 70% non-current asset, showing it is a capital-intensive company. Its equity increased from 24.22% to 27.21%, which means its capital structure is improving. IOI equity increased from 5.89% to 66.94%, showing a very strong equity position and no financial risk. Next, statement of profit or loss. YTL improved its cost control as cost of sales fell from 85.06% to 70.04%, and profit after tax increased from 4.87% to 12.74%. IOI profit margin were more stable, with profit after tax staying around 10 to 12%, although affected by changes in palm oil prices. Lastly, common size statement of cash flow. YTL generated strong operating cash flow and used most of them for investment. With positive investing cash flow in 2024, IOI relied mainly on operating cash flow to support financing activities, including dividend and debt repayment.
Steady growth in key financial areas, the IOI is experiencing lower revenue and profits. With more fluctuations, this suggests that YTL is financially more stable and has better potential for future growth, making it a stable and more sustainable investment choice. For the financial factor, YTL has strong and consistent profit growth with stable cash flow and improving ROE. IOI earnings are unstable and depends on palm oil price. Therefore, YTL is financially strong and more stable than IOI. For the non-financial factor, YTL diversified and strong focus on sustainability and green energy, which lower risk. IOI face high exposure to environmental and commodity and ESG risk. Therefore, YTL has a lower long-term risk profile than IOI. YTL Corporation's Berhad is recommended is because it has strong financial growth and stable cash flow. It divides the business which help to reduce the risk, and its focus on ESG support long-term growth. Therefore, YTL is a safer and better invest than IOI. Next, I will pass to Kylie.
So, in conclusion, neither YTL nor IOI can be considered the best choice for everyone, as both companies offer different investment advantages. YTL focus on infrastructure-related business, which provide more stable performance and steady long-term growth potential. On the other hand, IOI offers higher profitability opportunities through its active operation, but it also comes with greater exposure to market fluctuations with risk. Therefore, the final investment decision should depend on each investor personal growth, risk tolerance, and investment time horizon. Thank you.
Question. Okay, both are in plantation industry, right? So, according to your understanding, what is the level of dependence of these two industries on technology? And is there any major changes in this technology? Any financial changes into this technology? First, is there any changes? If yes, what is the financial impact? If no, what could be the possible financial impact in long term? Do you understand the question?